Welcome to another edition of Counting on Chazin. We're so excited. Although I have to say, Michelle, this is kind of an icky topic because we're going to talk about fraud. And I think in my heart of hearts, I don't want to believe that fraud would ever happen in the nonprofit sector. But I think you're going to set me straight today. So let's get in it with Michelle Jellick. Michelle, we are thrilled to have another one of the CPAs with us from Chazin Company. This is really an exciting thing for us to get you on with us to talk about these really important things that we do on Counting with Chazin. How long have you been with Chazin Company?
So I've been with Chazin Company for a little over 2 years now. I started my career in audit, and I've worked in government and nonprofit as well as public accounting.
Wow. Okay. So when we talk, you can really come to this in a lot of different directions, can't you?
Sure, I've sat on both sides of the table. I've been an auditor, I've been a finance manager, now I'm an outsourced accountant. So
Amazing, amazing. Well, again, I'm Julia Patrick, CEO of the American Nonprofit Academy. And again, with Michelle here to guide us, we're going to really delve into this, I hate to say it, but a frightening topic that we need to address. And I feel as though, Michelle, and maybe you can help me out on this, I feel like we don't talk about it until we've experienced it or it's kind of too late.
that tends to be what happens. We don't think it's going to happen to us, so we don't put a lot of thought into fraud. But if we design our controls and processes and put those things in place, we can really prevent these things from happening to our nonprofit organizations.
I love that. So I love anything that puts us in front of the ball as opposed to behind the ball. I think that's amazing. And you talk about that nonprofit fraud is real. It's not just a one-off. Is that correct? I mean, is this something that just happens to a few of our nonprofits, or is this a lot more, I don't want to use the word popular, but invasive, if you will, than we know?
I think it happens more often than we realize. It can be something as small as a phishing email that our bookkeeper falls for. It can be a large scale fraud that occurs over years before our board finds it or our auditors find it. So it can be on any scale. It's just because we're nonprofits doesn't mean we're not a business, and we're subject to the same flaws and the same fraudulent behavior that can happen in any organization. Even though we're passionate about what we do and we're doing things good for the community, we have to remember we're a business.
Yeah. I love that you said that because it doesn't dismiss the human frailty and the bottom line that this ultimately becomes a human element that we that moves into our nonprofit. So one of the things that I heard you say, and I'd really like to explore this a little bit, is you use the word preventative control. And so if you could explain that to us. I'm not sure if I really fully understand what that all means.
Sure. So we have preventative controls in place. For example, we may have approvals of our invoices or our payments before they go out. And then we have detective controls. So we have someone else reviewing our bank reconciliation or performing that bank reconciliation and seeing what's going through that bank account. It's not the person cutting the checks or making the deposits. So we have two types of controls. We need to have them both in place.
I love it. So you're talking about folks like the executive director, the treasurer, a bookkeeper, and maybe even a volunteer?
Sure. So often we just have one executive director when we're a small nonprofit, or maybe we have an executive director and a program person, but we can still have controls in place because we can have our treasurer perform our bank reconciliation. Usually we want that treasurer to be an accountant and somebody with some accounting knowledge and a strong background in finance. So our treasurer may approve some of our bills or our bills over a certain dollar amount, and our treasurer may perform that bank reconciliation. But we also want our board involved when we're small. We want our board looking at our monthly financials and our budget versus actual and asking why things aren't lining up the way they predicted.
I love that you said that because I feel like a lot of times And again, this almost goes back to how we launched this conversation. I think a lot of times boards don't look at these things until something's occurred, right? And so they haven't been marching through with the team, in these with these controls and understanding what's going on. Okay, so again, the word control, I love that. I think that's really powerful. But if you could expand upon that, we understand now who is involved, our people, our teams, our paid staff, our volunteer staff, boards. Now let's dig down a little bit deeper and talk about what those controls are.
Sure. So controls can be simple. We all know we need to perform the bank reconciliation,
Yeah.
but we don't need the same person who's making deposits and writing checks performing that reconciliation, because then no one is that second set of eyes.
Okay.
We don't need the same person who received the bill also paying the bill with no one else looking at it. So there are lots of things we can do to make that process simpler now with apps. So we use an app called Bill.com, but there are others out there that are really good. And Bill.com works on your phone. So if I'm the person who received the invoice, if I'm the bookkeeper, then I put the invoice in and I code it, but I can't pay it until it's approved. The system won't let me. So my treasurer then gets a notification, you've got bills to approve. He or she logs into their app on their phone. They're sitting at their baseball game or whatever, and they can look at the invoices. I've had to do that. They can look at the invoices and they can say, oh, wait, we didn't budget this much for this, or who spent this money and what was it for? If they're not sure, if it's not just the light bill that we know we have to pay, and they're not sure that it's a legitimate expense, there is that control in place, and that can protect us from that phishing email, because I, as the bookkeeper, may know we've always used this vendor. I didn't dig down deep to see that email address of who it came from, but I put it in there, and my treasurer, maybe my executive director, looks at it and says, wait a minute, we didn't authorize this pay. We didn't use this vendor for this project. Then we can avoid paying something that wasn't ours. And that is fraud against our organization.
I appreciate that you said that, because I think a lot of times in my mind, I think of fraud as somebody that's sitting in the back room doing something bad while they're at work. That it's not these external things coming at us, that it's more internal. And I think that's probably old school thinking with the amount of digital fraud we have, obviously. One of the things that you talk about is having written procedures, and having written procedures that the board understands.
Sure.
Is that part of this control issue?
So part of your control environment, your board does have a responsibility to assess risk annually. So your board should be looking at your accounting manual. There should be an accounting manual with written procedures that outline what these processes and controls are that are going to protect the assets. And then the board should set aside time once a year to review that. Does it still apply to your current business model? Have you outrun this manual? Do you need more processes in place? Do you now receive grants? And those weren't addressed originally in our accounting manual, because 5 years ago when we wrote it, we didn't receive it. Or if there have been, updates to our GAAP requirements that require you to update this manual. But annually, your board should assess risk. What are our risk areas? And then make sure these processes are being followed. Is my treasurer signing off on my bank reconciliations? Are they being done timely? Am I receiving financials timely? If those things aren't happening, we're opening up the organization to risk.
Mm-hmm. I love that you put it in that perspective, because I've got to witness to you in all my years of board service. Unfortunately, I don't think I've ever seen a document like that. And I've been on boards with very large budgets. So that's a daunting thing. I mean, that seems to me like a basic compliance issue that is internal. But I've got to say, I'm wondering if nonprofit organizations are really doing this.
So we try to make sure that our clients are, and it might be a finance committee that's performing this risk assessment, but someone within the board, whether it's a committee or the board itself, But the board itself should be aware of what those controls are, and as a board assessing risk annually and performing its own self-evaluation.
I love that. And I think that's an amazing concept because, again, it seems to me that a lot of this discussion happens after something's occurred.
Right.
Wrong
Yeah.
time. I mean, it's like, okay.
Sure.
I mean, it's such an interesting concept for us to even be talking about this. I want to go back to the digital nature of this because you mentioned something about how we have these external things coming in, a bill that looks official and legit, that might be phishing or might have a redirect for where the payments go. Can you talk to us a little bit about that? Is this really where fraud is moving? Are we seeing more and more of this, or what are your thoughts on that?
We are seeing more and more of this, and I received those myself, and it does take a minute. I actually, in a previous life, was a finance director for a government. We received them regularly. We would receive calls that would say, I'm your vendor and I need this paid, and tell me your account number so we can get this worked out. And we would receive, because we process payroll in-house, we would receive direct deposit requests, change requests, and we actually got caught for that. We had someone fall for that in the payroll department and change someone's direct deposit. It was someone who didn't catch it the first time, so it happened twice before they caught it. And actually, we kept getting hit constantly after we fell for it once.
Right.
So it's a real thing. It is a real thing, and that is truly how businesses are being hit now, and including nonprofits.
I'm fascinated that you talked about the payroll aspect because that hadn't even entered my mind, but we're all moving towards digital payroll. I mean, that's kind of one of those things. And so I would imagine that kicks the door open even wider for this.
Sure.
Now, I kind of I hate to go here because it breaks my heart, because one of these values that I have of service and public service and being in the nonprofit sector, I want to believe that we're all rowing in the same direction, and everybody's, righteous and doing the best they can. But we got to talk about internal teams. And I'd love for you to kind of explain or chat with us about the value or the misconception that we might have that if we have long-term employees, that we're more protected, that when we have new employees, that's when things are a little bit more risky.
Sure. So fraud can happen whether a person's been there a long time or a short time. There's a fraud triangle. And once we hit a point on that triangle where we have that personal life thing that happens, and maybe we haven't been in financial despair in the past, but we are now, there are things that happen to everyone in life. Generally, our long-term employees know what they can get away with. They know where our break and controls are. And I can give you an example of a foundation, a very large, well-known foundation in the South, had a CFO, an audit, long-term outsourced accounting staff that helped, big accounting firm performing their audit, board, very well versed in accounting, board treasurer. CFO saw the opportunity, had the financial break that causes folks to do things they normally wouldn't do. She had been with the organization for over 10 years. And she began putting personal expenses on a corporate credit card, and no one was reviewing her credit card. They did have an outsourced accountant compiling financials and doing the bank reconciliation, but they all went directly to her. And she was changing the financials before giving them to the board. She was out sick for a few weeks. And the board treasurer got the next set of financials and said, these don't look like what I've been seeing. This is weird. So went back to the outsourced accountant and said, why don't these look like what I was seeing before? And the outsourced accountant said, well, here's what we've then giving the CFO. As that treasurer dug in, he found things didn't line up and those financials had been changed. And as he dug deeper, he realized the bank reconciliations, those charges had been changed in these Excel formats. So it happened over a period of more than a year, and it was over $100,000 that this person took from the organization, and a large charitable foundation. And so very scandalous thing to happen, but it can and does happen. I will say one thing we put in place for our clients that helps prevent that type of fraud. We do send to either the executive director or the treasurer PDF versions of the financial statements, the bank reconciliations, and any adjusting journal entries we've had to make that they sign via DocuSign each month.
Smart, really smart. It's interesting too, that you mentioned that things were moving along in a way that everybody thought was fine. But when there was a break in the labor, that's when something changed. And I've always heard that, you need to force your accounting members to take their vacation, to have, like, if you will, a disruption so that things can't be manipulated.
Yes, so it's important if you offer 4 weeks of PTO that your accountant, your person in charge of everything, take those 4 weeks. And if there's somebody who never wants to take it and they're very protective, that doesn't mean that they're committing fraud. But it does mean that controlling behavior is a little bit suspicious. You want folks who will take their vacation, who are very transparent. So transparency is a big thing. So that's definitely something that you want to have happen.
One of the things that you spoke about, and it leads me to my next question, and I'm sorry, I have a lot of questions because this is a big topic, but the annual audit, it seems to me that, the audit is this like golden thing that comes down. I mean, in many cases, people come into our nonprofits and they do all this work, and then we're like, whew, okay, we're good, no problems. But explain to us why you might want us to think about the audit in a little different way.
Sure. So an audit doesn't guarantee that they're going to find fraud. What they say is, and if you read the audit report, it says it's free of material misstatements and errors. So it's not free of errors or misstatements, it's free of material. That level of materiality for auditors is much, much higher than what your donor or your grantor would find material. So an auditor may not be looking at, or they're definitely not looking at every transaction, but they may not catch that breach of controls. If I'm telling the auditor that we're doing all these things, but they don't find it in their sample item, the ones that I didn't do those things for, the month I didn't have the treasurer review the bank reconciliation, or maybe I did all the bank reconciliations at once and I got all caught up so that when they came in, they were done. But, I was 6 months behind all year. They don't catch that, and they wouldn't. But I didn't see cases where we had a recent case with a client that was new to us and came to us for some assistance because their auditor had even pulled one of their fraudulent transactions for the sample item, but the bookkeeper had so much control that she was able to give them evidence that supported the expenditure. What they couldn't see is that it was going into her bank account and wasn't going into the clients because she had done duplicate transactions, and it was caught when she left and a new bookkeeper came in and saw ACHs going out for the same thing he was writing a check for. And as he traced it, he realized these were all three of these what were supposed to be going to clients for services, ACHs, were actually going to the same bank account, traced further, and it was her bank account. So he was able to stop those, but she got over $10,000 from this organization in the few months that she was able to commit this. But she just this is a new bookkeeper, but she saw the breach in controls that she had the opportunity and she took it.
Wow. So, it's interesting because it goes back to that very first thing that you said. If you had those additional oversight individuals, the treasurer. Or I love somebody sitting at the baseball game approving, on their cell phone, some of these things right off the bat make it harder to do this. And
Sure, so
fascinating, fascinating. Okay, so then you've given us some examples that actually make my hair curl. So I got to ask, if this is happening and we should almost be on the lookout for it. We should almost expect it and, not be so in a Pollyanna denial. What do we do when it does happen?
so when it does happen, we need to report it.
Okay.
So first, gather all your documentation. If the person still works there and they have access to your assets to continue to misappropriate it, cut that access off immediately, but gather your support, store it in a place they don't have access to, they can't go delete the files, but then we need to talk to them about it, but seek legal counsel. And then if it's a true theft, in the case, both of these cases, they had to report it to the police and seek remediation through the justice system. And that's particularly true in the case of the small organization that was Health and Human Services grant money. Those federal funds, we've got to prove to that grantor that we took all the measures we could to remediate that and to get those funds back and have them available for client services. And we have an obligation to our donors and grantors to pursue this, even though maybe this was a trusted person and we know she fell on hard times. We can't think like that because we're a business and our first obligation is to our donors and our grantors in this case.
Michelle, it's really an interesting thing because I think so many of us in the nonprofit sector have a higher degree of empathy, and we understand the frailties of human nature. We deal with that. A lot of frailties of human nature are the underpinnings of why we have to serve our communities and why we want to serve our communities. And so I think it would be very easy for a nonprofit to say, oh, he or she, they were in a tough spot and I know them to be deep down a good person, so we'll let them get on a payment schedule and we won't talk about this or whatever. And I've got to ask you, have you seen that? I mean, whereas in the for-profit world, we're probably more aggressive. What do you think about that?
I have seen it. I don't think, in my mind, the for-profit world has a little more leeway to do that than nonprofit. And these things are, our 990 is public. Yes. And these are public funds. These aren't our funds. So it's not the same as if I own my own business and I'm providing a service. These are not my funds. And so we do have an obligation to those donors and grantors in the same way that a public company has an obligation to the shareholders.
I love the way you phrased that because that almost removes the empathy aspect or any sense of the personal, and understanding that moving forward. I've got to ask you this: is this the type of thing? In the very beginning, we talked about the control procedure and policy. Would the way you handle this also be described in that policy? And is that something that you predetermine?
It can be in your policy. I think your policy needs to be written in a way that you're preventing these things from happening and that you're putting these measures in place. But I do think internally you need to have a policy, and really you should have legal counsel retained for other matters, particularly if you're preparing a lot of grant contract documents. So legal counsel can give us the best advice on how to handle these situations. But if you have public funds, a grant, particularly federal funds, it's outlined in the grant what measures you have to take.
Interesting. Well, and that's something that, again, we don't talk about. I mean, understanding that, I think so often we're all about chasing those dollars, and then we're just like, okay, we've got it, and now move on to the next thing. And we don't even think about that. So I appreciate you bringing that up because it's such a critical piece of this whole thing. And we talk about this so much, and we've talked about this during our series, Counting on Chazin. It's about transparency and trust at the end of the day with our donor investors and our funders. And we must be transparent. We must be talking about these things and thinking about these things for the future of our organizations.
Sure. And in our 990, we disclose certain things about, we have conflict of interest policies, we have procedures in place. We also, if we're receiving federal funds, there's federal reporting requirements where we say we have to put that audit letter that we get, the management letter. And if we've had fraud, it's not going to be free of findings, and it can put us in jeopardy of receiving future federal funds if we haven't put these things in place and we haven't responded correctly when we do have an occurrence. And that's not to say everyone's having occurrences, but we just have to be aware that they're out there, and not think that just because we're a nonprofit, we're not going to be subjected to these things.
Yeah, because I think, when you're doing, as I always say, the work of the angels day in and day out and slogging through it, it's heartbreaking to think that you could have something like this. And I think a lot of us in the nonprofit sector, we don't even think about it because we can't even conceive of the idea. And so then that makes us even more vulnerable and probably less likely to even organize our controls and really monitor them and understand why they're such an important part of management.
Sure. And they are, and this is a business. And so
Yeah.
what we say is put some common sense processes in place and get them documented. And then you can focus your entire energy on your community service and what value you're adding to the community. But remember, you're a business. So put these things in place and follow them, and then spend your time on your mission, not worrying so much about fraud and is this happening. As long as you have these things that we've talked about in place, you're doing everything you can to prevent it.
Wow. Hey, Michelle, you have been great. I really appreciate you coming on, counting on Chazin, and talking about something. I'm going to go ahead. It's a big accounting word, but I'm going to use the word icky. It's an icky topic. Again, as we were talking, it's something we don't want to think about. And I really appreciate you kind of demystifying some of these things and helping us to understand how we can navigate this to the betterment of our organizations, and certainly honoring our donors, investors, and our funders. Hey, Michelle Jillick, CPA, amazing part of the Chazin Company team. We are going to be having more discussions with you, my friend, and I really appreciate how you've taken the time today to share your knowledge and your expertise with us on counting on Chazin. Hey, everybody, I'm Julia Patrick with the American Nonprofit Academy. It's been my pleasure to have you join us today. Check back with us. We have a lot more conversations on counting with Chazin coming forward, and I think it's a great way to build your nonprofit and understand how your nonprofit can be more and more successful. Michelle, thanks so much.
Thank you.